Hello everyone and welcome. Thank you all so much for taking the time to join us this afternoon for those of you on the East Coast and this morning for those of you joining us from the West Coast for our continuing education webinar on how to negotiate or renegotiate the terms and rental rates in your veterinary office lease agreement. My name is Brendan Madden. I will be your presenter for today's course, and I'm a senior consultant and lecturer with Cirrus Consulting Group. I've been with Cirrus for a few years now, and on a day-to-day basis, what I do is strategize, consult, and advise doctors all across the country on the best approach to ensuring their lease agreements are well structured to protect their interests and the goals for their veterinary practice in the short and the long term. And there's a number of items that we will be going through today. And in terms of the agenda, the first thing that we'll be discussing is a little bit of a background on Cirrus Consulting Group, who it is that we are, what it is that we do. We'll discuss some alarming industry trends as it relates to veterinary office lease agreements and clinic real estate. We'll discuss why the lease agreement is so important to you as veterinarians and your veterinary clinic, not only in the short term, but also in the long term and into transition and retirement. We'll go through some of the $100,000 traps that can be hidden within your lease agreements that, unfortunately, in my experience, many of you and your colleagues are not aware of. We'll discuss some key leasing considerations when starting, buying, or selling a veterinary clinic. We'll be discussing something called the tenant lease cycle, which goes through the appropriate timeline to begin lease negotiations with an existing or proposed landlord. We'll then move on to Cirrus's 8-step process for winning a lease negotiation that we've developed over our 25-year history. And we'll go through a critical dates and risk analysis, one of the services that we offer. And finally, time permitting, I'd like to go through some questions and answers, a Q&A period. Did you know the first stat that I wanted to bring to your attention is over 75% of veterinarians have signed an agreement, an office lease agreement, that can prevent them from transferring their lease agreement and therefore ever sell their clinic due to landlord interference. Animal health practitioners who engage in lease renewal negotiations without understanding some of the complex lease provisions end up paying hundreds of thousands of dollars in unnecessary rent increases. And finally, healthcare practitioners are one of the most coveted, if not the most coveted, tenant by landlords. And you're the least risky type of commercial tenant that a landlord can have, right? We as veterinarians have very low default and bankruptcy rates, one of the lowest in the country. We make a significant investment into the clinic in terms of leasehold improvements, equipment. We tend to increase the foot traffic to the building that we occupy, and we offer vital services to the community in which we practice. And finally, a veterinary tenant increases the property value of the building that we're in due to the long-term tenancy and the consistent rent being paid to the landlord for the occupation of the space. Cirrus Consulting Group is a healthcare and veterinary specialized tenant representation firm We were founded for healthcare professionals by healthcare professionals in 1994. So we've been in business for just about 25 years now. And on an annual basis, we analyze thousands of lease agreements. To date, we've represented over 1,000 practitioners. And in our history over the past 2 decades, we've negotiated over 10,000 office lease agreements for healthcare professionals in particular. On an annual basis, we conduct about 150 educational seminars annually, and we are participants in a number of the veterinary conferences nationally on an annual basis. And we have the thankful position of being the premier healthcare tenant representation firm for veterinarians in all of North America. I had our leasing team draw this illustration just to show you a couple of items. First and foremost, these are some of the recent customers that we have negotiated for on their behalf to ensure that their lease agreements are well structured to support their short and long-term goals, and to ensure that when it comes time to sell the clinic and transition, these doctors will have no issue and no landlord interference. As you can see by the illustration, we have significant experience in dealing with not only institutional landlords or large landlords, but also those smaller non-institutional landlords. And this illustration does a good job of showing that the issues that we'll be discussing today that arise in lease agreements for veterinarians are not solely found in certain parts of the country or certain areas of certain states, right? These issues that we'll be discussing today are included in lease agreements no matter where you are in North America. And if you're leasing a space, you absolutely need to ensure as a veterinarian that your lease agreement is better than any other tenants in the building. And we will get into the reasons why that's so important today during the course. To jump into the content, before we get right into things, I wanted to provide you all with a little bit of a market update in areas across the country. I started here with Boston, and what this graph or illustration shows in front of you is the trend in terms of rental rates and vacancy rates, property vacancy rates, in the Boston market. And as you can see, in blue, which is the rental rate, from the beginning of 2013, the rental rates in Boston have been increasing. As you can see on the yellow line, the vacancy rate trend has been decreasing. And this makes sense. Vacancy rates are decreasing, and if there's less supply on the market, less vacancy, rental rates tend to increase, as you can see by this chart. And what this tells me is, given the fact that we see similar charts in Chicago, Orlando, and San Francisco, if you have an opportunity in the near future to renegotiate your lease agreement, both economically as well as the legal terms and provisions in the lease, better to do so sooner rather than later and lock in the rental rates that we can obtain today versus waiting until those rental rates continue to increase and we lock in at a later and higher rental rate. What is a lease agreement? I'll give you all a moment to think of the first few things that come to mind when you think about what is a lease agreement. When I ask this question in my live seminars across the country, I tend to get similar responses. A lease agreement is a contract. A lease agreement is a marriage between landlord and tenant, right? A lease agreement is an agreement that outlines the rent that you're going to be paying and the amount of time that you have to stay in the space. I will oftentimes also hear that the lease agreement is expensive, right? It discusses the rental rates and our occupancy expenses on a monthly and annual basis. And it's not surprising that, often I will hear that the lease agreement is expensive. And the first thing that comes to a veterinarian's mind is the rental rate that we're paying on a monthly and annual basis, right? It makes sense because for most of you here today, the occupancy expense or the rental rate that you're paying to the landlord on a monthly and annual basis is, for a lot of you, the second largest expense for your veterinary clinic, right? Apart from staff salaries and wages, in a lot of cases, the occupancy expenses that you pay on an annual basis are the second largest expense that you incur for the practice on an annual basis. And so it makes sense, again, that we think about the rent and we think about the expense associated with a lease agreement when we think about the lease. However, I would argue to each and every one of you joining us today that the lease agreement is actually one of these that you see in front of you, right? And not only is it a check, I would argue that the lease agreement for the majority of you is one of, if not the largest checks that you will ever sign in your entire lives, right? The lease agreement for most of you will be one of, if not the largest checks that you ever sign or have signed in your entire lives. And I'll expand. On average, and I know some of you will be paying more and some of you will be paying less on a monthly and annual basis, but on average I think we can agree that a monthly rental expense is about $5,000 per month. And again, I know some of you will be paying more, some of you will be paying less for your space. But let's say we're paying about $5,000 a month in rent to the landlord. That's a $60,000 expense on an annual basis. And the majority of you, when you sign your first lease agreements, will sign an initial 10-year term. Over that 10-year term, a $60,000 annual expense becomes $600,000 that we have paid to the landlord. And I would be surprised if there's anyone joining us today whose rent has stayed flat over that full initial 10-year term, or who has rent that has been decreasing, right? So we'll assume that the rent stays flat over that 10-year period and over the life of the lease agreement. So 10 years is $600,000. In 20 years, that would be a $1.2 million expense. And on average, I believe that we can all agree the majority of you will practice about 30 years in private practice. And so over a 30-year period, that rental rate, or the expense to the landlord, becomes a $1.8 million expense over your career. If anyone had outlined the lease agreement in this way to all of you prior to signing that 40, 50, 60, 100-page document, would some of you joining us today have looked a little bit more closely past the first page, which discusses rent, and into some of those complicated legal terms and provisions in the 40, 50, 60 pages that follow the first and second page, which discuss rent? My goal for today's course is to convince each and every one of you that While rent is important, it's very important that we pay fair and affordable rent, the lease agreement is not all about rent. And it's so important that all of you have well-structured legal terms and provisions within the lease agreement that support your short-term and long-term goals for the practice. So why is the veterinary office lease agreement so important? Well, the business of veterinary medicine is one of, if not the most expensive businesses to enter into in the country. Right? On average, across the country, the investment that you make into the space in terms of leasehold improvements and the build-out will cost you anywhere from $75 per square foot to $100 per square foot. Let's say, on average, a new veterinarian will lease about 2,000 square feet. At $100 per square foot for the build-out, that is a $200,000 expense just to build out the space so that it is suitable to house a veterinary clinic. That does not include equipment. So on top of the $200,000 expense to build out the space, we can add maybe $300,000 in equipment expenses to bring the ultimate cost of entering into the business of veterinary medicine roughly $500,000 so that we can begin to see patients in our space. For that reason, all of you as veterinarians need to have better lease agreements than any other tenant in the building. You're making a significant investment into the space, and the clinic will be in the building for a very long period of time in most cases. And so it's so important that your lease agreement reflects that. The office location is the foundation of your veterinary practice. Without a location, we would be unable to see patients, we would be unable to produce veterinary medicine, and we would therefore be unable to earn a revenue. And so without a properly structured lease agreement in place, the location of your practice is not certain. The lease agreement, if not well structured, could, for example, be terminated upon a certain time period notice. And so it's so critical that all of you know what is contained in the lease agreement so that there are no unforeseen circumstances that would cause you to have to leave the space out of which you practice veterinary medicine quickly and quicker than you had expected. It's very difficult to move a veterinary clinic. We've discussed the investment that we make into the build-out of a veterinary clinic, and as you can imagine, we put a lot of time and energy into constructing that clinic so that it suits our needs, both in the short and the long term. If a lease agreement were to force us to have to relocate the clinic, it's not an easy job, and it's very time-consuming to do so. In the unfortunate event that we are forced to move the veterinary clinic within 30 or 60 days, for example, it's going to take us a lot longer than that to build out a new space in a new site, and we may experience some patient attrition. So for all of these reasons and more, it's so critical that, again, you all have lease agreements that are structured better than any other tenant in the building and that are going to support your short and your long-term goals. What are some of the benefits, then, of a properly structured and well-negotiated veterinary lease agreement? Well, number one, the lease should provide you with fair and affordable financial terms. And as I mentioned, this does not always mean the base rental rate. It's not all about the base rent. We need to ensure that the triple net costs, or the taxes, the maintenance, and the insurance costs that we are paying to the landlord are reasonable, and that the costs the landlord is passing through are accurate. We should also ensure there are protections within the additional rent article of our lease agreement to ensure that we don't see significant increases in certain expenses on a year-over-year basis. And especially when looking to start a veterinary clinic, there are a number of items that go into a well-structured, fair, and affordable financial deal, including tenant improvement allowances, free rent periods, fixturing periods, the operating cost section. These are all items that we need to take into account above and beyond the base rental rate to ensure that we're obtaining fair and affordable financial terms not only in the short term, but over the life of the lease agreement and when we sell the clinic. The lease agreement should provide you all with long-term stability and security. We've discussed how important it is to have a lease agreement that does not get pulled out from under you, forcing you to relocate the clinic unnecessarily. For those of you who are not yet in a lease agreement, you should all be requesting from the landlord a 10-year lease term with 2 or 3 5-year options to renew the lease that are transferable to an incoming buyer of the practice. Those options to renew absolutely need to be transferable and not personal to you, the current tenant. Number 3, the lease agreement needs to minimize any risk and exposure that we have under the lease. Unfortunately, in my experience, most of you joining us for today's CE webinar will have signed a lease agreement under your personal names. In some cases, you've also provided a spousal guarantee. Alternatively, for those of you who have corporations structured, you may have signed the lease agreement under your corporate entity. However, you've also provided an unconditional, irrevocable, absolute, and continuing personal guarantee, and in some cases, spousal guarantee. This is absolutely unreasonable. For all of you as veterinarians, there is no reason that you should be providing unconditional, irrevocable, continuing, and absolute personal guarantees under your lease agreements. Again, we're very coveted tenants for any landlord across the country, and for those reasons, and the reasons we've discussed, you all should be providing limited personal guarantees or no personal guarantee at all. The lease agreement should maximize the flexibility that you have to practice within the space. The landlord should not require you to operate only in certain times of the day and during certain business hours. For the majority of you, there's a reason that you got into private practice, and it should not be the landlord's responsibility, or the landlord should not be able to dictate the business hours that you choose to operate under. Another example of maximizing flexibility under the lease agreement would be including an item or an article such as a death and disability provision. God forbid something happened to any of you joining us today and you are no longer able to practice veterinary medicine, you should have the right to terminate the lease agreement or sell the clinic. And God forbid any of you were to pass away, your estates absolutely need those same rights under the lease to terminate the lease or sell the veterinary clinic as soon as possible. Those items should also be transferable to an incoming buyer of the clinic. This will maximize the value that you're able to attract when you look to sell if your lease agreement includes those types of items and your lease agreement is well structured and well negotiated for a veterinary practice. And finally, if we're able to negotiate a well-structured veterinary lease agreement, it's going to enhance your ability to eventually sell the clinic when the time comes, and it will absolutely ensure that the lease agreement acts as an asset as opposed to a liability when you look to sell. So what's in the lease agreement? I'm going to go through a couple of critical articles that the majority of you will find in your own lease agreements, and I'd like you to take a moment to read through the slide that you see in front of you, which is the option to renew article, and this article is found verbatim in 90% of the veterinary office lease agreements that we review. So for those of you who had a chance to quickly scan through this article, there are a number of red flags that should jump out at you. And I would encourage all of you to do something similar with each and every article in your own lease agreements. I would argue that you should bring out a highlighter and review each and every article to determine, is there anything that seems that it may be cause for concern or that could be a red flag within the lease agreement. As I mentioned, there are a number of items that are seen as red flags within this article, and I will walk you through exactly what those are. Number one, the first line of this option to renew article starts off by saying, provided that Dr. Joe Black shall remain as the tenant. Well, this tells me that this option to renew article is only valid if Dr. Joe Black is still the tenant. What this means is, let's say we go to sell the clinic in the future, and we're looking to transfer the lease agreement from ourselves, the seller, to the incoming buyer of the clinic. If this option to renew article is personal to Dr. Joe Black, it is not exercisable by the purchaser of the clinic, and this can cause significant problems as it relates to financing the acquisition of a veterinary clinic. So for those of you joining us today, it's absolutely critical that your option to renew articles are transferable to a buyer of the clinic. It goes on to state that, and if the tenant duly and has regularly paid its rent and has performed its covenants and obligations under this lease and has not been in default. This language needs to be changed. This makes it so that you can never have been in default of the lease agreement in order to exercise this option. Unfortunately, you have very busy schedules, And I've worked with a lot of doctors and a lot of your colleagues who have missed a rental payment for 5 to 7 days, who have defaulted in certain terms and provisions within the lease agreement without noticing it. And if this option to renew article states we can never be in default, it causes problems when we look to sell the practice or when we look to renew the lease agreement. It goes on to state that if you choose to exercise your option to renew, any such renewal shall be on the landlord's then current standard form of lease. And what that means is when you look to exercise the option to renew under your lease agreement, the landlord can put a new lease agreement in front of you which will have articles that may not be favorable to you, including demolition provisions, which would allow the landlord to demolish the building upon 30 days notice, or relocation provisions, which would allow the landlord to relocate you to another suite within the building. And unfortunately, oftentimes they do not pay for the build-out of the new suite. Absolutely important that when we renew our lease agreement, the same terms and provisions that were negotiated into our original lease agreement carry forward into the renewal so that we are protected if we have a well-structured lease. It goes on to state that in no event shall it be less than the rent paid in the last year of the original term. So what this is discussing is what will the rent be when we renew the lease agreement per our option to renew. How do we determine what the rent will be? And this states that the rent can never decrease. It says that it can never be less than the rent paid in the previous year, and this is unreasonable. In the event of a market collapse or a recession and rental rates decrease across the country, your rental rates need to follow suit. It then goes on to state that the rent shall be determined by arbitration based on the market rent for renewing tenants in the building. We don't know who those renewing tenants are, and we don't know what their rental rate is. It's very important that when we renew a lease agreement per the option to renew, it is based on fair market value, and there is a mechanism built into the option to renew to determine fair market value. So as you can see, this option to renew article, which is found in 90% of the lease agreements that we review, has significant issues for a veterinary clinic, and this is the reason that lease agreements for veterinary clinics need to be veterinary specific and not standard lease agreements for any retail establishment. The next article that I'd like to go through is one of, if not the most important articles within each and every one of your lease agreements. This is the assignment article, sometimes called the assignment and subletting article. And this is the article that outlines your ability to transfer your lease agreement in connection with a sale of the veterinary clinic. This article is found verbatim in 75% of the veterinary leases that we review, and so it's absolutely critical that you understand how this should be structured for your practices and some of the issues that we'll go through that are found in this article. The first line of this article states that if the tenant should wish to assign or sublet the leased premises, it shall first have received the consent of the landlord. We'll go through the remainder of the article, but you will see that nowhere does it say how exactly we obtain the consent of the landlord. This gives the landlord control over the transfer of our lease agreement and therefore the sale of our veterinary clinic. It goes on to state that any request for such consent shall be in writing, and within 15 days following the receipt by the landlord of such request for consent, the landlord shall have three options. Number one, to approve the request to assign the lease and sell the practice. Number two, to decline the request to assign the lease or sublet the premises. And number three, to terminate the lease agreement upon the effective date of such proposed lease assignment or sublet. This, in other words, is called a recapture provision that landlords build into assignment articles. What this means is if you, as a veterinary tenant, request an assignment of the lease agreement or a transfer of the lease agreement in connection with the sale of the veterinary clinic, the landlord can terminate the lease agreement. Your sale would therefore not go through, and you would be forced to relocate the veterinary clinic and build it up elsewhere if you still chose to sell that clinic. It goes on to state that if the landlord does grant consent to a transfer of the lease, the landlord shall have the right to revise the minimum rent being paid during the remainder of the term to the greater of the then current market rent for the leased premises, or 15% greater than the current rent. At this time, if we have found a buyer and agreed on a price for the sale of the veterinary clinic, telling the buyer that they need to pay 15% more in rent will either cause problems with the transaction or stop the acquisition from going through. It's very important that this type of language is removed from your assignment article within your leases. The next red flag states that furthermore, should the tenant receive from the assignee or purchaser or subtenant any rental income, cash, goods, or any form of consideration in connection with the rental rates payable to the landlord in any fiscal year during the term of this lease, the difference between the annual rental rate and such rental income, cash, goods, or other consideration shall be paid to the landlord directly within 30 days of the tenant's receipt thereof. What this means is the landlord is entitled to the proceeds from the sale of the veterinary clinic, and that you as the tenant must pay those proceeds to the landlord directly within 30 days of the practice sale. This, unfortunately, has caused problems with a number of the doctors that I've spoken with in the past, and you can imagine finding this out at the 11th hour of a practice sale is a detrimental and terrible time to be notified of this issue within the assignment article. It's extremely important that you all look through your assignment provisions to ensure that the landlord does not have control over the transfer and sale of your practice, and certainly that they are not entitled to any sale proceeds when you look to sell the practice. The assignment article finally states that notwithstanding the landlord's consent to any assignment or subletting, The tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignees or subtenants to observe each and every covenant under the lease. In other words, what this means is even after a sale of the veterinary clinic and obtaining the landlord's consent to a transfer, the selling doctor will remain a guarantor for the incoming buyer of the clinic. That means if the buyer defaults or stops paying rent or goes bankrupt, the landlord could come after the selling doctor in their retirement for the fulfillment of the lease obligations, including the payment of rent and the fulfillment of the legal obligations under the lease. As you can see, a well-structured assignment article which has been negotiated proactively to ensure that it is veterinary specific is absolutely critical for each and every one of you. Due to the time we have together today, I unfortunately will not be able to go through all of the articles that you need to be aware of in the lease agreement to ensure that it is properly structured and to ensure that the issues have been identified. However, some of the other traps that you'll find in your veterinary office lease agreement can be found within some of the articles that you'll see in front of you here. It's absolutely critical that each and every one of you look through your own leases to ensure that you know what is contained within these articles, and if there is anything that jumps out as a potential cause for concern, you identify that and proactively take steps to have it amended. So what are the key components when starting a veterinary clinic as it relates to the lease agreement? Number one, it's important to keep those rental rates as low as we can. For most doctors, the first few years of starting a veterinary clinic are the most difficult in terms of cash flow. And so the lower that we can keep the rental rates in those first 3 to 5 years, the more and the better the practice will do within those few years. It's also important that we discuss tenant improvement allowance among ourselves and with the landlord. In a lot of cases, landlords will contribute a certain dollar per square foot toward the construction of our clinic because they understand the significant investment that we're making into their building, and it automatically, once that investment has been completed, increases the value of the landlord's building. And so we need to take into account whether or not we want to take a tenant improvement allowance from the landlord. You should all be aware that if we take a tenant improvement allowance, which again is a dollar per square foot value that the landlord is willing to contribute toward the build out of our space, that tends to increase the rental rates that we end up paying under the lease agreement. And so it's a give and take as it relates to the tenant improvement allowance and the rental rates that we end up paying. All of you, whether you're starting a second office or starting your first office, should be obtaining a fixturing period of a minimum 6 months, which would allow you, once you've obtained the keys or possession of the space in which you intend to house your practice, 6 months to construct the clinic and equip the space without paying rent. And finally, it's so critical that at the letter of intent and lease stage, we're including veterinary-specific lease terms and conditions that are going to support the practice goals in the short term and the long term, that are going to minimize any risk and exposure that we have under the lease, and that are going to ensure the growth and the ultimate success of the veterinary clinic over the life of the lease agreement. Some of the key components to be aware of when buying or selling a veterinary clinic: the lease agreement, either way, must have plenty of term and runway. When looking to sell a veterinary clinic, the purchaser needs to have the certainty of at least 5 years of guaranteed term on the lease agreement that the seller will be transferring to the buyer in order to obtain financing for the acquisition, and in order to feel comfortable that they will be able to stay in the space for that minimum time period. Along the same lines, it's important that we always have options to renew at the back end of the lease agreement. When we look to sell the practice, the options to renew need to be transferable and exercisable by a purchaser of the clinic, therefore ensuring that they will have enough term in order to finance the acquisition and continue to practice out of the space. We need to think about personal and spousal guarantees when we are looking to sell or purchase a veterinary practice. Very importantly, when an older, more established doctor looks to sell the veterinary clinic, they should not be providing any type of personal guarantee or have any continuing liability under the lease agreement. As soon as a doctor sells the veterinary clinic to the buyer, the selling doctor should be released of all personal and corporate liability under the lease agreement moving forward. The assignment article, as we had just gone through, absolutely must be well structured in order to avoid any potential problems when it comes time to sell the veterinary clinic. And it's very important that we have items such as the death and disability provision within the lease agreement that are going to ensure the attractiveness of the lease for a purchaser of the practice, and that are going to protect us as the seller throughout the course of our career. For those of you who are currently in a lease agreement, what is the best time to begin negotiations with your landlord? We encourage all doctors, whether veterinarians, physicians, dentists, all healthcare professionals should begin the negotiation process with the landlord 24 months or 2 years prior to a lease expiration date or an option to renew deadline. This will provide you with the maximum amount of leverage that you can obtain in a negotiation. Landlords are well aware that it takes about a year, if not longer, to relocate a veterinary clinic. And so the closer we get to that point in time where it's too late to relocate, the less the leverage that we have in negotiations. If there's one thing that all of you joining us today will take away from this afternoon's course, it's to begin the negotiation process 2 years or 24 months prior to a lease expiration or an option to renew deadline, again, in order to maximize the leverage that you have in negotiations with your landlord. This is very, very important. So what is the right treatment plan for winning in a negotiation? Over the past 25 years, Cirrus has developed our process, and I'm going to go through the process that we utilize in negotiations with landlords just briefly here with you all. The first and a very critical part of the negotiation process is ensuring that you have all pertinent documentation on file. Unfortunately, I speak to doctors all across the country on a daily basis, and oftentimes there are missing documents from their files. They have documents that are unexecuted or which have not been signed, either by themselves or the landlord, or they have misplaced the original lease agreement because it was signed 20 or 30 years ago. It's absolutely critical, if you're going to win a negotiation and ensure that you obtain fair and affordable financial terms and well-structured legal terms, that you have all of the pertinent and necessary documentation to support the negotiation. That includes the original lease agreement, which has been signed by you, the tenant, and the landlord, and all subsequent documentation, any riders, amendments, extensions, estoppel certificates, guarantees. You absolutely must have each and every one of these documents to understand what it is that's most important in a negotiation with the landlord. The second step that we take is to identify your practice and career goals, both in the short and the long term. We need to know, in an ideal world and an ideal outcome, where would you like to be at the end of this lease agreement and this lease negotiation. Number 3 is when our legal team will review the office lease agreement for any red flags. We go through every article with a fine-tooth comb and do significant due diligence on that document to address and point out any potential red flags. Number 4, we prepare with market research. We utilize our internal database to determine what the market rent should be, what the current doctor is paying, what property availabilities look like in the area, and we prepare so that when we discuss the economics and the rental rates with the landlord, we have scientific research that shows us exactly what the rent should be, and we have something to negotiate based off of. Number 5, we develop an outcome and strategy for the negotiations, and then is when we begin. Only at step 6 do we pick up the phone and call the landlord in order to begin negotiations. We start by negotiating the economics or the rental rates and other economic considerations in the lease agreement. These are those items that the landlord wants to discuss, and this is why we begin by negotiating the economics of the lease. Step 7 is when we move on to ensuring that the legal terms and provisions within the lease agreement are veterinary specific and well structured for the veterinary practice, both in the short and the long term. And number 8 is a final review and execution of the lease agreement. Very critical that after a lengthy negotiation, the lease agreement that we're about to sign is reviewed carefully to ensure that every item we had won in the negotiation has been included appropriately within the lease agreement. Only after that final review and execution would we then sign the lease agreement and send it to the landlord. Some key takeaways from today's course. Number 1 would be The details of the lease agreement can cost you hundreds of thousands of dollars if left alone, and frankly, could stop the sale of your veterinary clinic in the future. I've seen it all too often. It's absolutely critical you know what is in your lease, and if it's not well structured, proactively ensure that it is amended. It's not just about the rent. Even though the rent is a significant expense for most of your practices, if not all of your practices, the legal terms and provisions can cost you a lot more in the long run. And it's about minimizing risk, maximizing flexibility and clinic value, and thereby achieving long-term peace of mind. And you need to be strategic in negotiations. You don't get what you deserve, unfortunately. You get what you negotiate into your lease. You get what you ask for. Again, a key takeaway is to start the process 24 months or 2 years prior to an expiration date or an option to renew deadline. And finally, critical to do your homework and your research. Make sure that there's a plan in place and you don't just pick up the phone and call the landlord to begin negotiations without thinking it through and developing an ideal outcome and strategy. For those of you who would like assistance in a review of the office lease agreement for your practice, I'm happy to offer to those of you joining us today a complimentary critical dates and risk analysis. This is one of the services that we provide. It's typically a $1,500 charge, but for those of you in attendance, we're happy to extend this offer free of charge. It's basically a 3 to 4 hour analysis of your office lease agreement for any potential traps, which is done by our legal team. We would then get on a conference call to go through the vision and the plan for the practice with you, the traps that we had uncovered and identified in the lease analysis. We will walk you through exactly what the ideal lease agreement should look like for you, and finally, the best route to negotiate with the landlord in order to effectively make changes to your lease agreement to ensure that it's well structured and that it will support your goals in the short term, in the long term, and through a practice sale into transition. If you would like to take advantage of the complimentary lease review consultation, there are a couple of options you would have. All of my contact information is included on the screen in front of you. You can certainly feel free to call me at any time with any questions that you might have about a lease, or you can email me requesting the complimentary lease review consultation. My email is included on the screen in front of you. And in just a moment here, I will put up a screen that will allow you to choose whether or not you would be interested in taking us up on the complimentary lease review consultation offer. So for those of you in attendance who would like to take advantage, certainly check the box that will allow you to do so, and feel free to browse the other boxes here, which are basically polls that discuss some topics that we would like some feedback on. I want to thank you all so much for taking the time to join us today. I know we've gone a couple of minutes over here, so thank you all very much for your time. If you do have any questions whatsoever as it relates to a veterinary lease agreement, I'm happy to chat and address any of the questions that you might have. Again, thank you all so much.